Hi people, this is for chapter 10 and it should help you very much doing your exercise 10A1. This is a similar exercise. The one that I did assign is also in the textbook, as you know. So we are going to click here to see the general journal entries that have already been made by the bookkeeper. And you are to post these transactions to both the general ledger and the subsidiary ledger, which is the accounts payable ledger. So let me bring up the T accounts as they are, and we're going to be recording in your fields over here, so that the accounts payable subsidiary ledger is a ledger that is kept separate from the general ledger. The intention of it, of course, the purpose of it is to see how much we owe to the various suppliers that we deal with. Very simply, we buy from Cortland, Fred, and Nickel.com. Now, aside of that is the general ledger, okay? So when you see the accounts payable, you know that there should be a backup ledger called the subsidiary ledger, and the end of the month, the amount that you show as total accounts payable owed should equal the sum of the individual accounts payable that have been updated certainly by the end of the month. Okay, so very simply, let's just look at the entries. When you buy merchandise, this problem assumes the periodic method, where you simply debit a purchases account and credit accounts payable. Now, we're not only going to credit the accounts payable account, but we also have to go to the subsidiary ledger to post in the $850 to Cortland's specific account. Okay, so why don't we do this? What I'm seeing here is the subsidiary ledger only at this point, and I'm not sure they're going to be looking for the general ledger as well. I know it's over here, but let's see what we have to do with respect to that. Okay, now when you buy merchandise in the periodic system, you simply debit an account called purchases. It's a cost account where we accumulate the cost of merchandise inventory, and that is the stuff that we purchase for the sole purpose of resale to the customers that we sell to. Alrighty, and of course, you'd have to go to the purchases account, which I'm not seeing here, okay, because I got everything up, don't I? Let me check. Yeah, okay, I got everything up. So apparently they're going to jump over to the general ledger momentarily. So I have to hold back on that that debit to the general ledger account, but I can go to Cortland's account and post the $850, and the date of that transaction was the 3rd, so we're going to pop in the 3rd and enter the amount of $850. Now that account, of course, is updated for that purchase. Now we also need to, I don't think I have to check answer. I think we can just run through. Again, I'm buying more merchandise here on the 4th for $550, and I have to credit Fred.com. So we'll come to Fred.com's account and post in a $550 credit. So Fred's account is up to date. Now what you want to note here is that I'm buying a piece of equipment, and that is not merchandise. I'm not in the business of buying and selling equipment. I'm in the business of buying and selling merchandise, whether I'm a shoe store, a department store, whether I'm a retail outlet, an online seller, or whatever. I use a purchases account if I am using the periodic system. As you'll note, we also have what is known as a perpetual system, where the difference would be that I would debit inventory because that system demands that I keep my inventory books up to date. So every time I buy something, I also have to post to the specific account. For example, if I was a department store and selling televisions, I would debit inventory and I would go to the separate inventory account. If I bought a Sony 40-inch TV with a model number of XYZ, then I would have a specific account for that specific television model XYZ, so I would know all the time how much I have in inventory, not by counting, but rather by the books, which would show that I have 3 or 10 or 20 of them. See, when you still have to take a physical inventory to know how much you have, no matter what. But when I use a periodic system, they don't take inventory until they're ready to prepare financial statements, and then they have to count the inventory and then bring it over, whatever is left, have to bring it over to the merchandise inventory account, which would appear on the balance sheet as a current asset. But if you had a perpetual system, you'd have an inventory account that's already on the books, and that would get carried over to the balance sheet again as a current asset. So it's a matter of counting inventory no matter what, but when you use periodic, you don't have to bother with daily updates after every purchase or after every sale. But when you use the perpetual system, you have to debit inventory when you buy it and credit inventory when you sell it. Okay, so anyway, let's see where this takes us. We've got one more posting here to nickel.com, and that was made on the 8th, so we'll just click on the 8th, pop in the $150, and I think that would take care of us. I don't see that there are any other entries here. There's nothing to scroll. Okay, so apparently I should get my credit balances. It looks like $850. It looks like $550. Right at the end of no payments were made, as you can see. When you pay off somebody, you've got to debit out his account to reduce the amount owed. But these 3 amounts are still on the books. None of them has been paid. Okay, so there's my $150, and barring any mistakes, I can't do anything in these accounts. Those are not fields of activity. So I guess if I check the answer, does that look right to you guys? $850 to Cortland, and $550 to Fred, and $150, $850, $550, $150, and I should be okay if I check the answer. Okay. Now let's see where this takes us. Oh, good. All right. So here what we have to do then, it's kind of backwards or not necessarily in the correct order. You know, if you're in an accounting system, a computerized system, as soon as you debit purchases and credit accounts payable Cortland, you click on Post, and everything is brought up to date. But just to let you know, you've got to get that debit to equipment in there. All right, it's not a typical way that we would normally post, but nevertheless, let's just show so we know that we would go to the asset account, equipment, for the $150. Okay, and that would have a balance of $150. I don't care what order you do these. You could have started up here, which probably most people would do. But anyway, let's get that done. And that brings down a $150 debit balance. Again, this is in the general ledger, so we have an equipment account. Now notice the action in accounts payable started up here. The same account, same subsidiary account that we credited $850 for can be credited here from the 3rd. We get everything posted properly. So that would be an 850 credit to accounts payable. We might as well take that first entry up there for the 3rd and show the debit and the credit for that $850. 850. Okay, so you can see your debit to purchases and your credit to accounts payable. That's the journal entry. And that $850, see if I can bring that all the way up so you can see the posting. Can I do that? Yeah. So that's the $850 that we purchased from Cortland, and they're already in the subsidiary ledger with it. Okay? And the second one was on the 4th, where we made another merchandise purchase. So we have to come down to the purchases account. Okay? And so where are we? Here. We're on the 4th. So we will click the 4th and throw in the $550 amount. So that's taken care of. And the credit was to accounts payable. Control account, we call it the controlling account in the general ledger for $550. Okay, so we're posting both to the general ledger account, accounts payable, as well as the subsidiary. So anything that we do in the general ledger involving accounts payable, accounts receivable, has to be duplicated in the subsidiary ledger that we maintain, whether it be accounts receivable or accounts payable, as is the case here. So we saw that $550 get posted to Fred.com's account. And then finally, we have to go to the equipment account, which I think we already did, right? So that we've got on the 8th, we debited equipment and we credited accounts payable for the $150. Did I get it in here yet? Nope. I got to get that $850. I'm sorry, that $150. I've got to get that $150 in the accounts payable account because I do owe that $150 to the nickel company. So we got that $150 in there, and you can see that it's already been posted. Like I said, when you use an automated accounting system, all you really have to do is key in the entries and the account numbers pertinent to the entries and the subsidiary ledger account numbers, and you click post and it's going to get done for you immediately. So what we're doing here is we're really getting under the hood, and we're showing you the specifics as to what the computer is already programmed to do for the accounting function. So that, needless to say, I've got my equipment balance, I've got to get my accounts payable balance. Bear with me. 8 and 5 is 1,300, and 50 and 50 is 400. Be 1,400, and 150 should be 1,550. I hope, unless I made a mistake. 850 and 550 is 1,400, and 150 is 1,550. I hope that's right. 850 and 550. Right? 8 and 5, 13, 14, and 150 is 1,550. I got 150 in the general ledger there. So the 1,550, you can see, equals the same 1,550 that I have as the sum of the three people that I owe money to. And what we would do in practice too is, you click subsidiary ledger and click enter, and you'll see how much you owe to each of these guys in what they call a schedule of accounts payable. That usually is prepared at the end of every month, and that total accounts payable has to balance with that 1,550 in the general ledger account. So it appears also that I have to get 8 and 5 is 13 and 1 is 1,400, and I hope I did this correctly. It looks like that, doesn't it? We check everything. We got debit to purchases, credit accounts payable, Debit purchases, where is it? Debit purchases, credit accounts payable for $850, right? $850. Got Cortland, $850, $850. Debit to purchases, credit accounts payable to Fred. Debit purchases, $550. Got it. Credit accounts payable, $550. Subsidiary ledger posting, done, $550. Debit equipment, not merchandise, because I'm not in the business of selling equipment. That is not merchandise. It's a separate asset. You know that. Okay? So you get the $150 that's got to go to the equipment account. Did I do that? Yeah, the date is correct. And did I credit the account payable account? Yes, I did. And the amount is $150. Did I go to Nichols' account with that $150? Yes, I did. And there is the balance. So these accounts should balance out. And if I click check answer, I hope I'm good. Oh dear, what did I do? June 4th is incorrect. What did I do wrong on June 4th? Debit purchases, credit accounts payable. Let's go back and see what we did wrong. June 4th, debit purchases, $550, credit accounts payable, $550. I got that right. Oh, I didn't put the date in. Okay. All right, so that should take care of it, I would think, right? I think that would take care of it. Let's see. Check answer. Okay, all right. See that? I forgot to put the date in, and it kicked me in the butt. Nice work. Okay, kids, I think that's all there is to it, and then I would go to a similar question to continue. So that should help you, both theory-wise, procedure-wise, and a lot of what we talked about here is among the information that you're responsible for as to the Chapter 10 objectives. Okay, I hope this helps you.